Hello, Maverick traders, and welcome out. This is Ankit from Maverick Currencies here, and this is our currency room for the upcoming week of February 5th till 10th. Let's take a quick look at this week. What a week this week in the market. So let's talk about what moved, what changed, and where we need to be positioning ourselves going into next week. So this is where we kind of come with a game plan, looking at all the information that we have gotten so far this week. And what a week. I mean, equity markets did extend gains. So this is again a two-part week because a lot of the movements happened today as we got the U.S. jobs report, and that caused a lot of big movement. So outside of that, if you just take a look at the overall market movement, I mean, we are seeing a very strong gains in the markets. So far up 8.82% for the year. So again, coming from where we were last year, I mean, we are up 18% from the October lows and 8.82% for so far in just a short 4 to 5 weeks of this year. So at this point, this market jobs report that we got today was actually not a good news for the markets. And I think this is where we might see a little bit more of a struggle going into next week as markets start to digest the data that we got today. But I mean, the big movement was really in the US dollar. I mean, look at the gains that we had. The biggest move so far since September 2022. So we have been in this bear market in the US dollar for the last 3 months. There really hasn't been any big changes. So this really gives us a bit of a catalyst, a bit of a change from the last few months. The dollar, as the dollar gained, the gold plunged. I mean, if you take a look at all the metals that have been doing really well on the weakness in the US dollar, I mean, what we are seeing today is a big reversal. So whenever you get a big reversal candle or a weekly candle, I think the following week becomes an interesting one because that's where we get to see a bit of a follow through. So I mean, you can see that just like the dollar, again, gold also posted the biggest move since September or early October. So really good trading week compared to what we had last week. Where things were a lot more on the down low, we are actually seeing a lot better price action, a lot better market condition. And this is where, we talk about trade the markets in front of you, and you want to sit on the sidelines when things are not moving and get active when things are moving. Cryptos, on the other hand, were up slightly, so we didn't really big down move there. They are, I would say, overall in a consolidation phase. So We'll kind of keep the cryptos at it. We'll have to kind of reevaluate and see when we get a big breakout. But so far, I think this consolidation phase can last a little bit longer. So let's take a look at the so far this week's announcements. Again, some of them were not the biggest mover until today. So if you take a look at starting Tuesday, we had some of the weaker data. Again, we have the New Zealand. You can see the employment report was not good. We had the FOMC on a Wednesday. They raised rates as expected, but the Fed Chair Powell was not as hawkish, was a little bit on the dovish side. I mean, we saw a nice rally in the equity markets and dollar did fall. On Thursday is where we start to see a turnaround. On Thursday, even though the market stayed positive, the dollar did actually reverse some of the movements from the day before, which again, a good sign where it's reversing some of the movements that we had on Wednesday. And then here we are on a Friday. The dollar is up. The dollar basket is up 1.58 or 1.6%, which is, again, it's a massive move, especially how negative the dollar has been. So I think today's move, I mean, take a look at the jobs report today. So jobs report today was a big surprise, and that's why we got the big move, because every time the markets are not pricing in for what the expectation is, I think that's where we get these big moves. So look at the expectation change. We had 517,000 jobs created compared to 193,000 they were expecting. And just to kind of recap, on Wednesday, we had the private ADP jobs report, and that was actually 106,000 versus 175 or 178,000 jobs. So that was a big miss. So this is a big surprise. I mean, take a look at the unemployment rate. Instead of increasing the unemployment rate from 3.5 to 3.6, it actually dropped to a 3.4. And then on just shortly after, we had the ISM Services PMI. As you can see, that was massive as well, 55.2 versus 50.5. So again, this is a scenario that markets were not expecting. Markets were expecting to have a bit of a weaker report, which means that the Fed we'll kind of have to go on the sideline here a bit. But with this job support, it really increases the bets for the Fed to continue raising rates. This is why we're getting a massive move in the dollar, because everybody was very bearish on the dollar. So we're just seeing a bit of a covering of that move here. And again, that also creates a good environment going to next week, because then we get some good follow-through moves. So let's take a look at last week's reviews performance and take a look at percentage change and see where the big movement was. And again, this is where it kind of looks a little bit deceiving, because if you take a look at the moves in the S&P or the world markets, you'll notice that the markets were actually up 1.58%. But again, giving up a lot of the some of the gains that we've seen since the early part of this week. So we're still holding on to the majority of the gains, but like I said, going into next week, this is where markets likely to struggle. The World Stock Index was down only up 0.64%. Crypto is up mildly. I mean, take a look at the percentage change in gold and oil. Gold is down 3.25%. So that's a big move, especially what we have seen in the gold market recently. And then take a look at the oil markets, also down 7.75%. So let's take a look at the chart here. As you can see that the big movements, I mean, look at the candlestick that we're getting here on the daily chart. We are above this downward trend line and pushing above the 20, the 50, all the moving averages. As you can see that the candlestick today was very much on the bearish side. So I think next week we're likely to test this breakout, and we actually give up this breakout, then we are back in this wide range that we were trading in. Also notice that we're seeing a pickup in volatility, ATR. You can see how much on the decline the ATR has been so far this year. The whole month of January, we have seen lower volatility. So it's nice to see a little pickup in volatility as we go into February. So I think the February looks really nice here going to next week. So let's actually take a look at the percentage change for the currencies. And this is where I think the biggest mover is really some of these growth currencies onto the downside. But I also want to keep in mind is that we are still range bound in a lot of these currency baskets. So when we take a look at range bound conditions, we have the support and resistance. We are not really making any bigger highs or lower lows. We're kind of stuck in the middle here. And I think that's where we are. If you take a look at the weekly change so far this week, we have the Kiwi was actually weak. Again, down the biggest move since December 19. We are down about 1.3%. If we take a look at the Aussie, same thing after having a massive week last week. I mean, take a look at that. Totally rejected this downward trend line here. And we are now down to the most since December as well. So again, this brings the total down to 1.4% on the downside. So Aussie was a bit more weaker compared to the Kiwi. Now, let's take a look at what the outperformers were. I mean, look at the CAD. I mean, CAD is also one of those disappointing currencies alongside of the US dollar. And look at the CAD. I mean, CAD is up 0.8%, which is, again, second consecutive profitable week, which we really haven't seen. If you look back in time, the only time we saw this consecutive profitable week was back in September. Now, if we take a look at things right now, we started off with a positive week last week, but then we really added on to the gains here. So I think at this point, if you're looking for a breakout, we need to break above this range here. So I mean, if the dollar continues to have its move, I think the Canadian dollar can also move higher as well. I mean, take a look at the velocity on the 4-hour chart. You can see the movements here. I mean, we are finally breaking above this cluster of move that we were in. 20, 50, and the 200 moving average. They were kind of going sideways for the last few weeks. So it's nice to see a breakout above. I would love to see this breakout above this level to have further continuation. But definitely the moves to be excited for as we are getting out of this, or I mean, we want to see a change that we haven't really seen for the last 3 months. So we had the ECB and the Bank of England as well, that they raised rates, but look at the aftermath. I mean, I've talked about this early this week, that we are in this environment where the central banks are raising rates, but they're also not optimistic about the outlook or kind of staying on the sideline. So this is, again, not a good environment for a continuation. Same thing we saw with the euro. As you can see, the euro did try to break out yesterday. and then we're right in the range here. So overall, euro is showing a bit more relative strength, but again, this thing is very much pushing against its resistance. So we don't want to be holding this euro long when we get this choppy price action. Now, the Swiss franc was a bit of a surprise for me this week. I mean, take a look at that. We're just going sideways here. I was expecting more weakness in Swiss franc, but clearly not developing here. So this is sideways trade. Even velocity-wise, it's not moving as much. So we're going to shelf the Swiss franc for now and come back to it when we get a better price action. The Japanese yen was actually looking a lot better. And I mean, take a look at the daily chart. We are back in the range. So one thing you want to keep in mind is that this is a range-bound currency so far. We have this is a wide range, but we are going kind of moving back and forth. And this is, again, the theme that you can see against all the other currencies. They're all either up against a strong resistance or they're in range. I mean, so look at the dollar. This is the one that I was definitely excited for. I mean, we have seen this downward trend for the longest time, and we got above this 20-day moving average. I mean, the last time we attempted to get above this moving average was the beginning of January, and then we just fell right below. And I think if you go back in time, you can see that this thing has been a strong resistance. I mean, pretty much since the decline started back in November. So this is, again, could be this could be a turnaround where we are probably getting a big move, maybe a expectation a little bit on the upside here. And I think that will drive the dollar higher, especially if the equity markets can take a bit of a move to the downside. I think this is where we probably will get a better move. But overall, I mean, take a look at the levels. I mean, go on a longer term chart. I've talked about it. I mean, this is a very nice bullish weekly candle here. So I think with this kind of candlestick, I would expect a little bit more of a follow through going into next week. So that's where we are in the markets. Let's do a quick market analysis and kind of take a look at how things are moving elsewhere and where we need to focus on. So looking at the markets, we are going to be looking at the overall outlook here. And like I said, if you just take a look at the overall markets, we are still a +2, above the 20, above the 50. But the fact that we got this weekly candle or this candlestick that is coming on Friday, I think we can early next week will be a bit of a challenge. And if we fall below it, then we can actually reduce that score to maybe a +1. So I think in the next 24 or next week in the first 2 or 3 days, we're likely to test this resistance, which is now the support. So that's where we are in the markets. Again, World Stock Index, you can see we had a nice run. And this is where, in the shorter term, I think we could be prone to some profit taking if this spills over into the equity markets a little bit more deeper next week. Now, looking at the crypto markets, crypto markets are slowly moving higher, and this is where we can't really be bearish on the cryptos right now. Nothing is really pointing out to a bearish side. It's just mildly bullish, sideways to slightly moving higher. But at this point, I think there's definitely better price actions you can find in the currency market or even the equity markets. And I think that's what we want to be focusing on. Now, looking at the schedule next week, again, we have one more central bank, which is the RBA rate statement. I mean, they're expected to raise rates tomorrow by a small, 20%, 25%, 0.25% rate hike, which is, again, in line with expectation. So I don't see these central bank statements are really driving the moves here. I think what's driving the moves here is the statement, the forward-looking outlook, and what's going to happen with the market sentiment, either a risk on or risk off. So after Monday, that's the only one that is on the schedule. We'll be actually meeting live for this, and outside of that, there's not a whole lot in the middle of the week. We have some central banks that they'll be speaking. So I think I'll be paying close attention to the Fed Chair Powell speech on Tuesday, especially after FOMC last week, and we had this massive jobs report. I think all the eyes will be on what the Fed Chair had to say. Outside of that, on Friday, we get some more data, which is the pound GDP and the Canadian employment report. So this is, again, another trade. I mean, look at the expectation there. It's a similar path on as the U.S. was. They're expecting an uptick in the unemployment rate, and a much weaker employment change. So if they comes out a little better than expected, I think the CAD will be a good catalyst to move higher as well. So this week outlook, I think market's likely to struggle after today's move. Today is Friday, so we need to see next week what kind of follow through we get. And at this point, I think the reward risk ratio looks better to the downside than to the upside. We'll be paying attention to RBA rate statement. I think there'll be good opportunity, especially the Australian dollar rejected this level. I think the Australian dollar can weaken a little bit further. Now with the economic reports, only on Friday is what I see a good trading opportunity. It should be looking for a news event. But outside of that, I think markets are going to give us good opportunities as the velocity is picking up. So let's do a quick currency analysis and see where things are. Let's start with the crypto markets. So we'll quickly scroll through this. Again, we have good trending scores, but we don't have a good velocity scores. So I don't really like that we don't have much velocity here. So whenever you see a velocity like this, it's better to be on the sideline. On the other hand, if you take a look at the currency markets, one thing I do want to point out is that we are in this market conditions where the trend scores are not as strong, but we are getting good velocity. So this is a good thing. Again, I'd rather get more velocity, even though I don't have a good trend score. It's still telling me that if there's a good velocity in the movements, then you kind of look at the markets on day-to-day basis and kind of go accordingly. So if you take a look at the dollar, the trend score is +1, but velocity is +3. So it was a massive move today, and I think that's where it doesn't matter how long of a bear trend that we are in. We got a nice little short-term move, and I think that's where you want to be, capitalizing on short moves. Same thing with the yen. I mean, yen is a 0, and as far as the trend score, velocity is also down to 0. And I've talked about it before. I think yen is really the most difficult trade right now. It does have its period of relative strength and period of relative weakness, but overall, it's not really catching attraction. So I just want to keep everybody in mind is that if you take a look at these trend scores, this is where it's telling you, should I be holding a trade for much longer, or should I be looking for trades that would last maybe a day or two, but nothing longer than that? I think that's where the markets are at. I mean, take a look at Swiss franc, trend score is sideways, but velocity score is also sideways. We have the euro, again, trend score. I'll still give it a 0. And the reason I'm giving it a 0, even though they're above the 20 to 50 moving average, in a sideways market, you notice that the moving average start to flatline. And that's, again, not a good sign or not a good indicator when you get range-bound conditions like that. You can't really use the moving averages to guide you because they're kind of flatlining here. So what you can do is that you can take a look at support and resistance level and kind of trade between that. Same thing, if you take a look at British pound, this is in a massive sideways trend. We got a nice little a dip lower. But look at the velocity score is down as well. So we're getting a nice move to the downside. But overall, keep in mind is that we still need to break these levels to really catch, a big multi-day trade on this. Same thing, Canadian dollar, trend score is 0, but we had a nice movement here. So I'll be trading these ranges until we break out of these ranges. We had the Australian dollar, and you can see the Australian dollar was really back at this previous breakout point. So if you were very excited to be long the Australian dollar, I think this is where you cut that expectation. It's down to the trend score is down to a +1, but I think at this point this could be running in trouble, especially if the risk sentiment changes after today. And lastly, the Kiwi, same thing. Kiwi is also sideways, and Kiwi is also having a nice velocity score of -2. So until we actually break the currency baskets one way or the other, I think that's where I'll be shifting the outlook on trend score. But outside of that, I'm looking to trade in between, keeping a close eye on the follow throughs, because in a range bound conditions we might not get a follow through. But if this is going to break lower, let's say all the currency baskets break next week, I think that will be a great market environment on a follow through. So pay attention to these currency baskets. So now trend scores, like I said, most of the things are in the middle. So let's not pay too much attention to that kind of movement, because I think when you get trend scores that are more in the middle, that means that I can trade a currency both ways. And this week is a good example. Aussie was a big mover on the upside, and the downside. Same thing with the euro. Things are bouncing back and forth. So this is where you want to be right in the middle and just take advantage of the opportunity when the velocity picks up one way or the other. Now you can see the velocity is really down today, and that was actually on the negative score in the velocity, -3 with the Aussie, Kiwi, and pound. That's really where the big movement was. And on the plus side, we have the dollar and the CAD. So nice movements, especially if you are pairing this. Again, the best movements you get is when you are pairing +2 against a -2 or +3 against a -3. Whenever you're looking something in the middle, that's where you don't get the biggest move. +1 to a -1, not really that exciting here. So I think we need to continue looking for these two areas and see what kind of follow through we get next week. So let's talk about possible trades ahead and see what looks good on a technical basis and where we need to put our attention to. So let's just start with the Aussie dollar. So Aussie dollar was a trade that we caught this morning in the the NFP class that we did. We caught this trade very nicely in the morning. We entered going into this news event, and as you can see that it just fell apart since then, and we haven't really seen one single green candle, on an hourly chart. So again, this is just telling me that I think this wants to head lower. So this is the level. If you missed a move today, well, what you need to look for is consolidation. Right now, still it's extended. I would love to see some consolidation to kind of jump back into it. But on a daily chart, look at that. It's kind of given up that 20-day moving average. At this point, 68.50 is where the next support is. We also have, let's take a look at Kiwi dollar. This is another pair that actually moved very nicely. When you look at that, it's kind of given up the 20 and the 50-day moving average. So this thing has been above the 20, the 50 since November. So I actually do like Kiwi short or Kiwi dollar short going to next week. I think next level of support will be right here at about 62. So it's still another 130 pip to be caught here before it can hit that 200 moving average. Now we can take a look at other currency pairs as well. Take a look at Kiwi CAD. Again, looking into the Canadian dollar, this thing is also doing very similar. But take a look at the break here on the moving averages. Nice move here. This thing had a massive run in the last quarter, and I think I would like to see this kind of fall back further, especially if we see kind of resuming the trade where the CAD picks up and the dollar picks up. I think we can start to kind of reverse some of these trades. Again, this is all about the expectation on further continuation of the moves from today. Outside of that, like I said, some of the things are kind of stick right in the middle as far as the trend goes, and I think that's where we want to be, not overly bullish and overly bearish. If you get a good strong trending score, that's where I would like to be a little bit more bullish and bearish. Otherwise, I think there's still good opportunities to be had both ways within that range. So after a big move like this today, we're likely to see the market consolidate, hold the gains, and that would be again a sign for markets to continue towards the upside. So regardless of what dollar crosses you look at, they all will look actually good, pretty good across the board. Some of them are cutting the 20 moving average, some of them are below the 50 moving average. But this is again telling you that that's where the movement is and further continuation could be as it really gives up these key technical levels. So that's a game plan. I think next week, I'm definitely excited for next week. I think there will be good trading opportunities going next week. I like the fact that velocity is picking up, and that's really where we want to be. So equities, again, likely to be pulling back, bullish on the dollar. So that's the premise for next week. And we'll be looking for follow-through and confirmation. If we don't get a confirmation, time to be on the sideline. So looking for confirmation next week. Always focus on volatility and currency in play. Take a look at the ATR. Take a look at the RSI. Take a look at the things that are kind of telling you that something is moving rather than stagnating. Just like the Swiss franc this week, more on the sideways side here. Cryptos again consolidating. I think there's better price action in equity markets and the currency markets. And as always, follow relative to the weakness. And schedule-wise, next week we'll be meeting live on Monday night for the RBA rate statement. And as the week progresses, we'll be adding more classes to it. So always pay attention to the schedule. And if you have any questions, reach out. Great job, everyone. This has been it's been a great trading week, and let's look to add on to the winnings going into next week. Take care. Have a good weekend ahead.